What's up YouTube, Cardboss here, Buying the Talk episode number 8. Today I've got a very interesting topic which came out of a recent discussion that I had with a viewer on what's the real thought process that needs to go in before buying into today's stagnant NBA card market. But before I dive into that, I just want to show you a stack of PSA returns I got back recently, and it's a stack of PSA 10s and 9s of Chris Paul 2005 Topps base paper rookie card. Now, there are a couple more which are actually on the way to consignment. It's not in here, and this Chris Paul example is going to be relevant to today's discussion. So let's talk about a very frequently used term in the sports card investing world: upside. Now, upside by definition means potential, positive aspect, advantage, bonus, etc. When we're investing in cards, be it sports or Marvel, it's all about identifying and gaining the upside in every possible deal that we make. Ideally, when the upside materializes, it then turns into profit, which is all what we want, right? Now, upside can be short-term, like a couple of weeks or months, or even stretched like longer term, like 5 years. So there are a couple of important questions that was actually discussed in my conversation the other day, and I thought I just want to share with you guys, right? So firstly, how do I identify or recognize upside? So already out of the block, the question draws uncertainty with many difference in opinions. If you talk to a couple of different people, one of the popular answers is looking at trends and price charts. Now that's what most content creators out there will tell you. Look at this chart, that chart, recognizing the bottom, looking at plateaus, when's the timing, when's the right time for the potential swing, all of that, But does that really make a lot of sense to you? None of us are well trained in economics and finance. Some of us are probably just have very normal jobs, sales agent, builder, chef, a writer. What do we know about reading, understanding charts and graphs, to make a to create a decision process and to identify upside of the cards they want to buy? At the end of the day, we're just relying on, quote unquote market experts, and what they tell us and how they interpret the charts. But if you take away the so-called experts' advice, we're just making educated guess on what we think the value of the card can be. So it's not as simple as just making assumptions of, I think Luka's going to be great, or Brooklyn's going to win it all this year. There are a combination of factors which of course involves part analytics and part instinct. Now, what people really need to realize that there has to be actually a balance between the two in order for you to make that kind of sound decisions. Too much analytics and the decision is based on the sum of digits or statistics, or too much emotion likely put you on a wrong path, of somewhat of being delusional. And what I mean by that is, how often have you, when considering whether a certain card or a player to buy, you keep asking yourself, whether is this a good buy? You keep asking yourself that question. You are technically seeking reassurance from yourself on the merits of buying a card solely from the emotional standpoint, as opposed to weighing the other half of the equation, i.e. the analytics. Now, I find that a lot of people I talk to get trapped in this mindset of self-reassurance. I have to admit, when it comes to gut instinct, the emotional part does strike initially, but usually the analytics will kind of support or counter that and will steer you towards the right direction. And I think that's how everybody should approach, in any investing opportunity. Now, the next question would be, what is, upside? What upside is realistic? Some people say 50% is what they're looking for. Some people go for 100%, right? Or some even as low as 20%. Are all these numbers realistic? Yeah, sure, but it depends on which card, what's the grade, population, who's the player, or even when you sell it, right? So all these variables doesn't really address the question head on. And once again, if you're really trying to rely on, some advice, to give you guidance, what are all the different things that people are saying is not actually helping you to make any better decisions at all. So I believe when everyone started on this journey, the goal is to make money and have a lot of fun doing along the way. Some of us invest in more traditional assets like stocks and bonds. We have similar features in calculating return, but of course it's less exciting in sports cards. But if you actually think about it, the amount of time that you spend researching, monitoring, transacting, it all adds up, and potentially the average hourly return for your sports cards can sometimes be far lower than like tucking away your money in a mutual fund. But of course, where's the excitement in that? That's all true, but one thing I'd like to remind people is to continuously bankroll your upsides. Now, can a car reach greater heights while waiting? Yeah, it's possible, but it can swing the other way too. So recognizing when to exit from upsides takes a lot of skill and nerves. But I think that that's the only way to continuously build wealth and equity for this class of investments specifically. And lastly, is upside guaranteed? Now, nothing in this world is guaranteed except death and taxes, so let's be certain for that for a second. But when it comes to investments, any investments, there isn't any return without some sort of risk. Even for guaranteed payback or interest, the risk is not financial risk, i.e. losing your capital, but the risk of not doing something better with that capital, i.e. opportunity cost. So even how experienced a person is at looking upside, nothing is considered guaranteed. So with experience, your risk exposure can be minimized somewhat to assure you of a better upside or a better return. Some people discuss arbitrage, and that's a totally different game altogether. Personally, I dislike arbitrage, not because I don't like making gains. I do admit that arbitrage gains can be small, but in multiple folds, it can really stack up. But basically, I dislike arbitrage because it's boring. If I were playing the arbitrage game, I'd probably be picking Amazon returns or something like that. Now, I'm not dissing people who make money from arbitrage, but when it comes to sports cards investing, we're talking about making money at a solid and at a potentially wild scale. It's fun, it's exciting, and more often than not, it can be very risky, super risky. But that's what makes the market great and exciting. So now, looking back at this Chris Pauls here, right? What's the deal with all these Chris Pauls? I've showed you a couple already. Let me take through the illustration of what exactly I've been talking about in the last few minutes. Now, these Chris Paul, or in fact, Chris Paul's cards in general back in early 2020 wasn't doing all that great, despite his stellar play in the playoffs, for the very underappreciated Thunder team. CP3 Topps 2005 paper rookie card can be bought for about $15 to $20 per card back in around, say, April, the bubble time, when cards were kind of a bit flat, or some actually went up, but Chris Paul's just remained consistent. And you compare that to, let's say, Carmelo or Dwayne Wade, it seems like it's on the extremely low side. Now, all we know that CP3 is going to go in the Hall of Fame one day for sure, next few years, right? So this could actually be the ultimate long-term play. And back that time, PSA value still going for under $20. So it's a no-brainer to have each of all these graded, and a fair estimate of about $100 to $150 for a PSA 10. So if I went in for say 20 copies and half came back at a 10, it's a nice $1,000 to $1,200 profit for a very small investment amount, and that is exactly what I did. Now, before anyone comments, right, this is not going to make me rich or anything like that. I didn't say that was the purpose of this video. We are trying to identify and recognize upside here, and Chris Paul as a player was the upside back then. The low base value for this Topps paper versus other Hall of Fame potentials like Wade or Carmelo was the upside, right? And I was assuming that the gains weren't gonna come before his retirement. Of course, this was without knowing that he would join Phoenix and lead them to the finals. Now, of course, combine that with cheap grading fees back in 2020, which, side note, I knew it wasn't going to last. But the combination of potential from Chris Paul itself, Topps paper, the digits, which can translate to a certain and quite a conservative return, which all makes sense to me here. Now, two questions, right, that stick out specifically to this Topps Chris Paul paper. Number one, how sure was I on getting back so many tens? I spoke about trying to get half tens. Well, specifically, if you look at this Topps border frame, and you compare that, say, the 2003 LeBron's year, Dwayne Wade's year, the cutting on these 2005 products are actually pretty good. And, quite often you get quite nicely centered copies. So the quality of the card is already inbuilt, in the set, which is going to help you to succeed. And next question you ask is, why stop at a dozen or 20 copies? Why not 100? Well, you have to stop and think about how much quantity that the market can absorb. So if this was a LeBron or a Luka, yeah, perhaps it's worthwhile buying more. But for Chris Paul, I believe the value actually diminishes quite rapidly if there's a lot of quantity that floods the markets or the population count surges to an uncontrollable amount, right? And we saw that for Zion Prism PSA 10. Now, by no means, Zion's a bad player or there's no potential in his career, but natural market competition due to sheer quantity just depresses the prices down. And you have to bear in mind that there could be some other people thinking the same way as me on these Chris Pauls. So making a tight conservative play allows me to just maximize the upside position, right? Because had I gone for 40 or 50 or 60, I guess the percentage of returns gets smaller and smaller as more quantities enter into the market. So what's the math here for these CP3s? Right? I bought a total of 22 raw copies with an average price about $16.60. 14 of them went to PSA, and so far I got back 11 copies from grading with an average grading fee about like $12. So the remaining raws didn't make it, and they were sold as that. Now today, so in total, I've spent $536 in total and sold $241 with still 8 copies of PSA 10s and 3 copies of PSA 9s that's still unsold. Now the slabs have a combined value, I believe, maybe around $2,000. So I kind of make good out of this. Now I do recognize that a lot of my viewers are probably making bigger bucks than by just pointing a finger at Ja or Trey or Luka. Sure, it can be as simple as that, but there are people on the other side of the equation, back in late February who bought at peaks are now reeling. Who knows what the thought process was and what was the assessment of upsides on those monster prices back then. Alright, that's all I got for today. I hope you guys enjoyed today's session. Do like and subscribe if you enjoy this content, and I hope to see you guys soon. Cardboard's out.